Welcome back to the Ultimate Trading Podcast for beginner traders. This is the fundamental analysis chapter, where we're guiding you through the essential tools and techniques that will make you a more informed and strategic trader. In this episode, we're diving into tip 27, company news. Now, let's talk about something that can make or break a trader's success, company-specific news. I know, news is everywhere, right? We hear it constantly, whether it's about mergers, acquisitions, product launches, or earnings reports. But when it comes to trading, news is far more than just headlines. It's vital to your decision-making process, and the right kind of news, timely, relevant, and insightful, can significantly influence your portfolio. The world of trading is fast-paced. Prices move quickly, sometimes dramatically, and much of this movement can be traced back to one thing: news. When a company announces a game-changing product, hires a new CEO, or reports better than expected earnings, the stock can surge or plummet, sometimes within minutes. As John Bollinger, a financial strategist, once said, the market's reaction to news events often reflects not only the current state of the company but also the broader economic landscape. Simply put, news moves markets, and if you're not staying on top of it, you might miss the opportunity, or worse, be caught on the wrong side of a trade. Let's dive into why company news matters. First, news affects market sentiment. Think about the last time a company you follow released a blockbuster earnings report or announced a merger. The stock probably jumped, right? On the flip side, if the news is bad, maybe a product recall, a negative earnings surprise, or an executive leaving, the stock could take a dive. Benjamin Graham, the father of value investing, summed it up well. In the short run, the market is a voting machine, reflecting immediate reactions to news and rumors. This volatility, driven by company news, is exactly why traders who keep their fingers on the pulse of the news can position themselves ahead of major price moves. The key is to understand not only what the news is but how to interpret it. That brings us to integrating company news into your strategy. Every trader, from beginners to pros, should be doing this. When you get a news update, whether it's on mergers and acquisitions, earnings reports, or product launches, you need to evaluate how that news fits into the broader context of the company's fundamental analysis. For example, a positive earnings report might validate an already strong thesis about a company's growth potential. On the flip side, a missed earnings target or a product launch that falls flat could cause you to rethink your position. Analyst Mary Buffett puts it nicely when she says, monitoring current developments provides real-time validation or revaluation of a company's financial outlook. But there's also risk management to consider. When news breaks, it can add a layer of uncertainty or risk to your position. Let's say a company just announced a recall on a popular product, or a regulatory body has launched an investigation into the company's practices. If you're not aware of this news, you might find yourself holding on to a position as it declines. Peter Bernstein, a well-known economist, once said, risk is about the unknowns, and traders should be vigilant in monitoring for news that may alter risk calculations. So, having an established system for tracking news, something like an automated alert system from Bloomberg or Reuters, can help you manage these risks before they turn into major losses. Now let's talk about the types of company news you should be tracking. First up, mergers and acquisitions, MA. These types of news can send shockwaves through markets. When a company announces that it's merging with or acquiring another, it can signal strong growth potential, but it can also come with risks. An acquisition that's perceived as overpriced or unnecessary can hurt stock prices. On the other hand, a well-executed merger with clear synergies often boosts stock performance. Research backs this up, with studies showing that strategic MA activity tends to result in favorable stock performance, especially when the synergies are clear and the acquisition makes sense. Next, we have earnings reports. Quarterly earnings are one of the most important pieces of company news. A positive earnings surprise can send stock prices soaring, while a miss can bring them crashing down. Warren Buffett once said, earnings reports are snapshots that reveal whether a company is delivering on its promises to shareholders. These reports give you insight into how well a company is executing its business plan. and they can drastically change your outlook. If you see that a company is consistently growing revenue and beating expectations, it could signal a strong investment opportunity. Product launches and innovations also deserve your attention. Think about companies like Apple or Tesla. When they announce new products or technological advancements, their stock often moves in a big way. Paul Krugman, the Nobel laureate economist, puts it simply: innovation is the cornerstone of growth, often accompanied by substantial stock gains. Keeping an eye on these announcements can help you capitalize on companies that are expanding their market position. Then there's management changes. A change at the top, like the appointment of a new CEO or the departure of an influential executive, can significantly impact investor confidence. Nassim Taleb, the financial writer, warns that a company's fate is often tied to its leadership, and it's true. A leadership change can lead to a shift in direction, so it's important to assess how the market reacts to such news. Finally, keep track of regulatory and legal news. Legal disputes, regulatory changes, and government investigations can create major uncertainty for a company and its stock price. Regulatory news can alter the risk profile of a company, either increasing its exposure or providing it with new opportunities. Now, let's look at a real-world case study to see how tracking company news can lead to successful trading decisions. In January 2023, TechCorp, a leading technology firm, announced its plan to acquire Innovate Tech, a company at the forefront of artificial intelligence. This was huge news, as it signaled a strong growth strategy and bolstered TechCorp's AI capabilities. Trader Jane, who had set up alerts for major corporate news, was immediately aware of the announcement. She quickly did her research, analyzing the potential benefits of the acquisition, synergies between the two companies, market position, and future growth prospects. After weighing the positive aspects of the deal, Jane decided to go long on TechCorp, buying at $132 per share. She also set a stop-loss at $125 to manage risk, and a profit target of $150. Based on historical data from similar acquisitions in the tech sector. Over the next few weeks, TechCorp's stock rose in response to the acquisition news, hitting her profit target of $150. She locked in her gains and exited the position. By staying on top of company news, Jane made a well-informed decision and turned a potentially volatile event into a profitable trade. So, what's the takeaway here? Tracking company news and integrating it into your trading strategy is essential. Having a robust news monitoring system in place, analyzing the significance of the news, and adjusting your positions accordingly will help you stay ahead of market moves and manage risk effectively. Now I want to hear from you. Have you ever made a trade based on company news? How did it work out for you? Drop your thoughts in the comments down below, and let's discuss how real-time news has impacted your trading journey. In conclusion, company news is a dynamic and crucial component of fundamental analysis. By staying informed, integrating news into your trading plan, and making timely adjustments, you can make smarter, more strategic trading decisions. Remember, the key to successful trading is not just about reacting to the market, but anticipating it, and news is one of the most powerful tools you have to do just that. Join us next time as we tackle more tips and strategies for your trading journey. Until then, happy trading, and keep refining that strategy.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.